Let's get an expert opinion then. We're joined by Dharmesh Kant of Motilal Oswal. Hi Dharmesh, thanks very much for joining us. This is Navneet. Dharmesh, quickly, I want to view on ITC. That stock actually has been doing pretty well. It touched its lifetime high. Suddenly we've seen a crack coming in there. According to you, would it be wise to invest in a stock like this just ahead of a GST which could be implemented this week? This year?
Yeah, good afternoon, indeed. I think as far as valuation is concerned, but there has been a fair run-up in the stock price of ITC, which leaves hardly any scope for further, appreciation because it's very near to its fundamental valuations as far as that is concerned. And FMCG counter, particularly for the likes of Hindustan Lever and ITC, I don't think there is much scope left for further re-rating from here on. So they will continue to see, selling pressure coming on. And ITC, what they smartly did in the month of December was they took a price hike of 12 to 15% on the cigarettes, and they were expecting something to come through excise in the budget. So that has not materialized to the extent the expectation was there, and that benefit goes into the stock price. So more of a profit-taking kind of a spree is happening. GST overall, one has to see the final tax structure which is being rolled out, the different slabs which government is talking about. When the fine print is there, then only one can take a call on how much benefit can translate to different segments of the corporates through GST. So till that time we have to wait, but yeah, the sooner it is implemented, the better it is. One more overhang, the policy thing which is being deferred gets out of the way.
Right, Dharmesh, as you were speaking, Saturn Credit Care reporting its earnings, a slight profit bump coming in of 16.3 crores versus 15 crores. So stable as far as the profit figure is concerned. Remember, you are watching out for some of these microfinance lenders' earnings very closely to assess if demonetization has had any impact on it. Total income has also jumped significantly, coming in at 207 crores versus 142 crores. The stock up by about 0.6% at the moment. Dharmesh, this is a theme that we've spoken about time and again. If you look at the run-up that's come in on a stock like Bharat Financial Services from those lows of about 470 odd to where it is at currently, it's been a smart pullback on the counter. Even some of the other NBFCs have seen that revival after the kind of initial hit of demonetization as far as the stock price is concerned. Going by the kind of earnings that you've seen, is it fair to assume that possibly NBFCs have made a kind of comeback? They were market darlings for the first half of 2016 at least, and what's your call on the space? Will you be investing in any of these names?
Yeah, definitely. We are fairly bullish on entire NBFC space, particularly on the microfinance and housing finance NBFC rather than MSME kind of play. So their microfinance does stand a very good, re-rating chance even from here on. Though the run-up, the stock price run-up has been very hard, specifically on Bharat Financial. And some cooling we are seeing from the around 830 or 40 odd levels. So we were having a 1 year valuation target of 883 on Bharat Financial, so almost it reached there. But as far as the space is concerned, the very fact that government allocated around 2.44 lakh crores of rupees to the Mudra Bank itself speaks volumes about the type of vision even the government is having towards the expansion of the microfinance industries, because it's the last mile connect in the entire digitization theme. So once people get more comfortable with the e-payment and payment through the electronic form, so microfinance will gain more and more accessibility, and even their business will become more procedure and system driven through all this electronic medium. So that's an added advantage as far as our dealer stakes are concerned. What we get in information from the ground level is local money lenders are now almost out of the system. So it is again left to banks and microfinance institutions to provide fund to them. So NBFCs, particularly microfinance, remains a hot favorite, and they will continue to do so. Equitas and Bharat Financial is on which we have a coverage, so one can continue to go along on that. And NBFC space, housing finance companies like Diwan Housing Finance and IC Housing Finance, Canfin Homes still is a very hot favorite. So would suggest investors to keep on accumulating that, because all the good effects, be it budget, be it lowering of taxes for the needy section of the society, for even for corporates, MSME, they have lowered the tax from 30 to 25% for turnover of less than 50 crores. So all these sections were vulnerable sections which have been taken care of. Further, you have benefits of 7th Pay Commission playing out, good monsoons playing out, and overall now a very stable state of environment where the policy is now in place. Now it has the business and the economy to perform, which I think should be the case going forward. So these companies should be bought into.
Right. Contrary to market expectation, because of demonetization, there was actually an expectation. The numbers may not be that great, but look at the numbers of Bharat Financial. They were pretty good in the December quarter. We'd seen huge correction actually for that stock post demonetization, but the way it has corrected, smart gains actually seen for Bharat Financial. Also, if you could just pull up last 1 month chart, we've seen some strong gains post the earnings for Bharat Financial. That's up about 24% in last 1 month. Mohit, as far as I remember, you too had a buy call on Satin Credit Care.
Well, yeah, it's got a really good chart structure, and actually one can buy this stock even now. You need to have a deep stop around levels of 425, 430, and in the coming 6 months you could see levels of even 550. So this is not something you trade in, but you'd buy and hold for maybe the next 6 months, and you can easily see a 20% upside from present levels on Satin Credit Care. Just make sure your stop loss is around 430, 425 zones.
So more legs on the stock of a Satin Credit Care. Mohit, it's 3:15, time to get in some trading ideas for you. What are you looking at today?
Well, a bunch of stocks are doing well, especially in the mid-cap segment. So Nesco is one that's looking good on the charts, trading at all-time highs. Though it's cooled off from the day's high, nonetheless, it's still a good buy call. You can buy it with a stop around levels of 2200 for targets of 2350. Also, City Union Bank is looking good on the charts and has seen a nice up move in trade today after a series of downward moves. So this can head higher towards levels of 162. It's a buy with a stop around levels of 153.
All right, so those are some of the calls coming in from Mohit. Let's look at the markets. Actually, some kind of selling has been seen in the broader markets. Your BSE mid-cap index is now trading at day's low. That's down by about 0.3%. But let's talk about United Spirits. That stock's doing pretty well. Let's just pull up the chart of United Spirits. It's seen some gains of about 4%. I believe it's at intraday high now. That's 2,347. Mohit, we were chatting about this stock, and we've seen some good gains. There are a lot of positive factors also coming in for United Spirits. The numbers this time around, especially, that was a major positive trigger which came about. Would you advise to enter into this stock at current levels, because we've seen that move from 1900 to the current levels?
You know, again, in this stock, it's good to buy and hold this stock because it's got a very positive chart structure. It's made a really strong bottom around the 1850, 1900 zones. We've seen an up move from those zones already. One can even enter a fresh right now, have a deep stop around levels of 22, 25, and you can easily see levels of even 2600. If one's willing to hold for like a year to 18 months, even levels of 3000 are possible in the next 12 to 18 months. So broadly, the chart structure is positive. It's bottomed out. It's a good quality, high pedigree stock, and like you said, the numbers have improved. So this could perhaps see a good up move in the next few quarters towards even levels of 3000.
Right, some flashes at the bottom of your screen, and this is Kuchensis reporting that the Finance Ministry intends to revisit the pace of small savings rate. Some more cut was warranted in the small savings rate. They are saying that for now the small saving rate has been kept unchanged to avoid a jolt to customer, but there could be some revision coming. They have not accounted for any pay allowance hike in the FY18 budget. So those are some of the flashes coming in with regards to the Finance Ministry and the move that's expected on the small saving rate. A lot of earnings to talk about with Dharmesh. Let's talk about Idea. Those numbers expected tomorrow. Remember, the company was supposed to report its numbers on the 23rd of January. It delayed that. Since then, a lot of development, a lot of movement on the stock as well. In merger talks with Vodafone, due diligence is on for that, and that is something that we are tracking quite closely. But this time around, the profit hit on an Idea could be severe. We are expecting a profit slide of 490%. Call it the Geo effect. Let's in fact connect with the Piyush Jain to give us a complete breakdown of what's expected from Idea this time around and the key factors that are going to weigh on its Q3 earnings. Piyush.
Well, this result should be a first in its kind for two reasons. One is the analysts are expecting this perhaps would be the first loss Idea would be posting since its listing, and also secondly, this quarter, the Q3, will be the first quarter which will have a full-blown impact from Jio's offering. Now, if we take a look at expectations, the expectations are going to tell you how bad actually analysts are expecting for Idea this quarter. The profits are expected to go down by about 490%, which means from a profit of 91 crores last quarter, analysts are expecting roughly a loss of 364 crores this quarter. Revenues are expected to dip by 5%, EBITDA is expected to dip by 15%, so the dip in profit is going to be actually driven by lower EBITDA, and that lower EBITDA is primarily going to come by a dip in pricing, both in voice and data. And as we know, because of Jio's pricing, both Idea, Bharti Airtel and the industry as such, they actually have gone ahead and cut down prices, and Idea actually in turn has shifted back to the volume strategy in Q3 after shifting to price strategy in Q1. So again, due to the volume strategy, the price cut has been quite significant, and that is going to play a part in terms of the Idea performance also. Now, in terms of we also know that the higher interest and depreciation because of capex and higher spectrum spend, that actually was already causing a dent in the Idea margins, and now because of the price cut, again the EBITDA is going to go down, and that's actually going to play a part in the profitability also. Nevertheless, what is more important now in the result would be is that the expectations on both the price for data and voice in terms of revenue, if you see, the analysts are expecting mid-single-digit decline in the voice revenue and double-digit decline in the data revenue, and this double-digit decline is going to be driven by a cut in the data pricing, and for the voice also again the pricing. Volume growth in both data and voice at present, the expectations are pointing to a positive volume growth, and that's why actually we should keep an eye for if the data volume growth and the voice volume growth is that actually is not giving a concern, basically a reason to worry, especially in data volume growth, then I think it should be meeting the analyst expectations. But if the trend emerges that despite a very good high subscriber additions, if the data volume growth is not that good, then I think that will be taken very, very negatively. Apart from that, actually, what analysts are also expecting that in terms of subscriber additions, the churn would be a very important metric to see. We know that prepaid subscribers, they form the large chunk of the overall subscribers. So the churn actually that increases, I think that will be a negative sign and seen as an unstable addition of subscribers over the last 3-4 months. So overall, for the Q3, expectations are pointing out to a big loss in terms of net profit, deterioration in terms of the EBITDA margins, and also cut in pricing is going to play a part in fall in the voice revenue and data revenue. Keep an eye on what sort of margins are being posted by Idea, and number two, what is the trend on the data ARPU and data volume growth. That is going to determine the stock trajectory. But in terms of the stock price reaction, that at present is largely driven around the expectations of a merger swap ratio between Idea and Vodafone, for which we have been hearing from the management. Perhaps that is some time away, giving a flow to Idea stock price.
All right, so not a good quarter expected from Idea. In fact, it could just be the first quarter since listing that the company could post a loss. We will be watching out for those numbers, but the stock has done pretty well in last 1 month. It's nearly doubled on back of that news of merger with Vodafone. Dharmesh, let me come to you on telecom sector. This is one sector where the companies are debt laden, and we've not seen much of returns coming in from call it Bharti Airtel in last 2-3 years, or for that matter Idea also. How would you approach this sector? There is Reliance Jio has made an entry, and we've seen that news of Vodafone Idea merger coming through. Would you recommend investors entering into this sector, and if yes, which stock among these do you like?
No, I would never, recommend for investors to get into this space, because overall, if you look at the business structure and the way the business is being run, be it the voice business or the data business, I don't think it's going to have double-digit growth on the realization front, and the margins sequentially will be under pressure as the days roll by. Competition has been intense, and technology makes it more cheaper and cheaper day by day. So there's no case from current, in the current scenario and the prices at which these stocks are, trading, that value buy or a wealth creation kind of opportunity is there in any of the stocks. I mean, be it Bharti or Idea or Reliance for that matter through Reliance Jio to be getting invested into. More of a trading plays which will come off and on, and that is it, because eventually be it the voice realization or be it the data realization, though the volume traffic may increase, but a blended realization on absolute terms will have single digit kind of a growth. So I don't find anything great into it. So what I would suggest is to book profit and get away.
Book profit and get away. That's the call coming in. Idea, of course, as Navneet was mentioning, has seen that smart rally in the last few trading sessions, and that has had a rub-off effect on a Bharti Airtel as well. On a 1 month basis, the stock of Idea has nearly doubled, seen smart gains over there, sitting at about 110 for now, but of course likely to post its first loss since listing, so that could be a big concern for the company going forward. Dharmesh, then where is the value in the markets right now? You've seen that smart pullback rally of about 900 odd points. Banks have performed smartly. Bank Nifty has added about 2,500 points in the recent run-up. Going forward then, what should be the strategy for investors? Where should they be putting their money? Where are you finding value?
See, I would maintain the same stance which I have been maintaining for the last 9 months or so, and for even CY17. The cyclicals are the space where one has to remain invested into. Those cyclicals are a bit, volatile segment, because a small correction in the market can induce a bigger correction in the stock price. But that is the way it has been. And the sectors which I think will still provide you a very good upside from the current levels where they are is first is the public sector banks. SBI, Bank of Baroda remains the top pick out there. Then the financials, particularly the NBFC space like LIC Housing Finance, Can Fin Homes, one can stay invested into that. Materials, cement is looking very attractive, and that too into mid cap and small cap like Ramco Cement, Dalmia Bharat, JK Lakshmi Cement. These are the top picks from that space. And cement will keep on giving you volume growth and a slight uptick in the blended reaction, because the government infra push is there, housing sector push is there, so everything is working for the cement space. Metals, I would it's not for a weak-hearted people, because metals prices are also determined by the international volatility in the price. So I would advise to stay away from that. But still, if somebody is strong enough, then Hindalco and JSW Steel are the two very attractive bets from that space. Apart from that, the consumption themes like auto and auto ancillary, two-wheelers, Hero MotoCorp remains the topic, four-wheelers, Maruti. The stock price has been correcting now, and that's a good opportunity to get into that, because 7th pay commission and entire consumption theme will now play out with remonetization being in full swing, and as the income levels go up. So this is a space one has to remain invested. Auto ancillary looks very attractive. Amara Raja Batteries and Bharat Forge are the two picks from there. Defense, Bharat Electronics. So these are the sectors which we have been consistently repeating and advising our clients to get invested into, and these are the sectors which have yielded results. I think for CY17 this will be the top performers.
All right, those are some investment ideas coming there from Dharmesh. Let's just pull up the chart of State Bank of India. It was trading in the positive territory throughout, but just if you look at the intraday chart, it's actually slipped into red, and that's the reason we've seen some kind of selling coming about in that particular stock. And also Nifty has corrected a bit. So State Bank of India, if you look at the chart, it's at days low currently. So some kind of selling has come on higher levels. Bank of Baroda is still sitting with good gains of about close to 4%, which will just be coming out with numbers. And pharma is one space which has been weak since morning. In fact, the Nifty Pharma Index is down about 1%. Your biggest losers on Nifty as of now, Aurobindo, Dr. Reddy and Lupin.
Right, just about a couple of minutes to go before we wind down trade. So let's close out for you. The Nifty holding its head above water in trade today, near that 8,800 mark, and it's been in that phase more or less through the day. So about 0.2% of a gain coming in on the Nifty. It's been a good week for the markets. Bank Nifty up about almost 0.4% today, and Bank of Baroda, the top gainer there, ahead of its earnings that are expected shortly. IndusInd Bank, Kotak Mahindra Bank, Federal, HDFC Bank, Axis Bank, all of them doing well, but as Navneet mentioned, SBI slipping into the red, was up about 2% at one point in the day, is down about 0.2% right now. ICICI Bank taking a knock as well, down by about 1% as we speak. Grasim and Tech Mahindra, the top two gainers for you, and no surprises there. MSCI rebalancing kicks in today. Grasim has been included, and the figure on Tech Mahindra has gone up. So both these counters are cheering that move and are up about 4% on a Grasim, and Tech Mahindra up about 3.5%. In fact, it's been a good day for the IT space. So the IT index up about 2.5%. Tech Mahindra, like I said, but apart from that, TCS, Infosys, HCL Tech, Wipro, all of these are seeing smart gains in today's trading session. Adani Port, the other big mover in trade today. Tata Steel having a good day. Remember, signing a definitive agreement with Liberty Group to sell off its operations in Europe, part of its operations in Europe. A lot of Yorkshire-based plants over there. The steel strip operation, as it were. NTPC good in trade today. Coal India having a good day. L&T picking up momentum as well. Eicher Motors, Bajaj Auto, ONGC, BHEL, all of them doing well. Bharti Airtel, we were talking about telecom a while ago, also seeing some kind of a gain coming in. What's not good today, Aurobindo reacting to its earnings, down about 4% in trade right now. The management saying that the US business continues to remain under pressure. Pricing pressure is really playing out over there. BPCL also on the back of earnings, down about 1.7%. In fact, Pharma as a pack has been weak in trade today. So Lupin, Dr. Reddy's, Cipla, all of these counters seeing weakness. GAIL also ahead of its earnings on the back foot. ITC receding from its record highs, a 1.3% cut coming in over there. Power Grid reacting to its earnings, 1.19% cut. Bosch also reacting to its earnings, down about 1%. Asian Paints, Z Entertainment, M&M and Bharti Infratel, some of the other stocks that are on the back foot. Broader markets, though, Navneet, a bit of a subdued session over there as well. So like you were saying, mid-cap index really slipping to the day's low, but the small cap index seems to have held out just about flat.
That's right. The small cap index has just ended the day flat to positive. So not bad actually, because the broader markets have been outperforming the benchmark indices. Some kind of breather seen there today. So you got the BSE mid cap index, which ended the day lower by 0.3%. Let's look at a couple of losers. Then you got the Steel Authority stock, which was down about 6% in today's session. That was on back of bad set of numbers. You also had Nalco, which was down about 5%. Tata Communication, Ashok Leyland, Reliance Communication are a couple of the stocks which ended the day in red, and you have Sun TB, which has been doing quite well in past few sessions, and because of which you had the media index also falling today. So some profit booking has actually been seen on Sun TV. There were a lot of long positions which were seen on the future side, so could be a case of profit booking. Let's also look at a couple of gainers. Then Oberoi Realty was the biggest gainer on your mid cap index, followed by GMR Infra. L&T Finance was too up and about, but there were some stocks which actually outperformed. You had Arcotech, which was locked in upper circuit today. That stock will just come up on your screen. Besides that, Aegis Logistics intraday, it picked up momentum. That stock was too up about 11%. Besides that, you had Alembic, Apar Industries, which were all up, and you also had Sickle Logistics. That stock reacted quite positively since the start of the day, so good going there. That's also Apar Industries up 6%. Sickle Logistics was up 10%. Good set of numbers were posted for that particular stock. Max Ventures has been doing well since yesterday. We've been mentioning that stock for you. Today also it ended the day actually off day's high, up about 3.5%. Also MBL Infra, Harrison, Malayalam were a couple of stocks which outperformed. So overall, the broader markets have been doing pretty well. It was just a day of some kind of profit booking which kicked in. And also if you look at the market breadth today, in the morning it was actually in the favor of advances, but deep towards the end there was some kind of actually seen it's the end of the week, so probably traders don't like to hold on to their positions. So market breadth was actually in favor of the declines. That's about 7:9, and it was a day of low volume. Yesterday volumes were pretty much on the higher side because of the expiry on the bank Nifty option side, but overall for the week I think we are ending the week in the green territory.
That's right, Navneet. So investors possibly choosing to be a bit on the sidelines in trade today. But Mohit, just to revisit the range for next week, you've outlined that broad range for us, and we made that attempt at 8800 but couldn't hold on to it. What are you watching out for?
Well, on the index, broadly we're above between 88.20, 88.30 on the upside and 87.20 on the downside. Now this is the fifth session, which means the whole week within a small tight range of less than 100 points. And I think that next week perhaps there's a chance we'll see a breakout on the upside, because we've held on to this range pretty strongly. We've kind of spent more time at the higher end of the range as opposed to the lower end of the range, which tells me that there's inherent strength, and I think that perhaps we can break out on the upside and head higher towards levels of 9,000 in the coming week or maybe the week after.
Right, Mohit, Dharmesh, thank you for joining us on this leg of trading day. Just as we were winding down today's trading action, you had Berger Paints that posted its earnings, and profit absolutely flat at 109 crores versus 111 crores. Consolidated income has seen a mild uptick, coming in at almost 1300 crores versus 1235 crores. So that's Berger Paints numbers for you. We'll try and get you a bit more fine print on that. But Berger Paints, the profit figure absolutely flat for them, slight uptick as far as income is concerned on that. But from Navneet and me, it's goodbye on this edition of the trading day. Watching out for two big earnings that are still to come. We'll connect with you next week to take all the market action forward.